talk about names and stocks which are gaining and gaining quite substantially on today's editor's cut, isn't it, Alex?
Absolutely. In fact, we're talking about three of them, ABB, Siemens and Honeywell Automation, which I must admit I was very surprised at the price chart intraday yesterday. Supposedly 5 times the average traded volume, and this is a stock that is above 50,000 rupees. It ended with gains of over 6-7%. Quite substantial.
Intraday was up about 17% as well.
It's crazy. So, but you know what struck me while I was looking at Siemens India or Siemens Limited versus Siemens AG? Siemens Limited, the year-to-date performance 2024, it's up 75%, whereas Siemens AG is up just about 4%. I don't know what that says about the India stock market.
Well, I think one of the global companies went out and sold a large stake, right? Because they said that, hey, we're just getting this arbitrage. Look at our valuations. Look at the India subsidiary valuations. Was it Novartis, if I'm not wrong? They sold out 24% stake. I think it was Novartis, but I may be wrong. But one of the global
But we're talking about automation, right? We're talking about automation companies.
Yeah, so make this quick. I mean, yesterday, one trait, and we were talking about it in the trade setup as well, that some of the MNC CapEx beneficiaries, automation companies did really well. I mean, that whole pack did really well. So the ball bearing companies, you look at SKF, Timken, Schaeffler did very well. ABB, 9% ahead of numbers. 10% post the numbers, another 2% yesterday. These are egregiously expensive valuations, but the street loves these stocks. They can't get enough of it. And we have experts coming on air and talking about how they are very happy buying these stocks because there is supposedly a moat. Now, here's some reasons, Alex, and let's debate this. We'll make this quick, but let's debate this. So I was, what is it that these companies have done, right? So for all of ABB, Siemens and Honeywell Automation, in that order, the numbers have looked fabulous in Q4. ABB was probably the best. Siemens comes in a close second. Not quite an ABB, but still good. Honeywell, not quite a Siemens, but still good. Let's put it that way. So those are the kind of numbers that they've done in. Pretty even Stevens on the margin.
And outlook has been fantastic as well.
Most importantly that, Alex. So there are two things out here, right? One, look at the margin trajectory for an ABB, right? And we have that trajectory up on the screen. In Q1 FY23, they were at margins of 10%. Q2 about 10% ABB. They moved up to 15, 10, 11, 14. They've clocked in 18.34% in Q4. Similarly, for a Siemens, from 10% to 15.3. For a Honeywell, they've stayed steady, but from 16 to about 18%. Now, the beauty is that the base effect for each of the exit rate is 18, 15, what have you. The base effect is not so much. If you look at the calendar year numbers, for an ABB, for example, if they've done margins of about 15%, 15% and 14% in each of the preceding 3 quarters, and now they've done 18%, and they're saying that there are no one-offs in the margins, which means that if you assume that they will do 18% margins each quarter again, safe assumption, then they are anyways clocking in a 3% margin beat versus the corresponding quarter last year.
And versus pretty much the average over the last several quarters.
Right. And they are showing sales growth. So therefore, the PAT growth is higher. You can extrapolate that PAT growth and show some pretty strong PAT numbers for these companies over the course of the next 3 quarters at least.
So therefore, EPS growth. So therefore, price.
And therefore, expensive price earnings multiples can be justified. The other small aspect is that for people who are bullish here, and we were speaking to BofA's Amish Shah last year, wherein he had spoken about this theme, and he had said that if you just look at what happened to the EBITDA of some of these companies back in 2003 to 2008, when CapEx cycle came up. And we are not saying that this CapEx cycle is similar to last year. If anything, by the way, these companies have a stronger mode this time as opposed to the last time, because it's not a very wide participation. There is green hydrogen and some of the niche areas coming in, wherein an ABB has, or a Siemens have an edge over some of the other players, right?
No doubt.
But the point is, the point that Amish was trying to make then was that if you look at the EBITDA for some of these companies between 2003 to 2008, the EBITDA doubled again, and then doubled again. That's the way the EBITDA for some of these companies grows when they are in an upcycle. Now, are we at the end of the upcycle and the margin appreciation? Who knows? At 15%, everybody was saying ABB is done enough. Now they are coming and saying that we have clocked in 18% and there are no one-offs. So who is to know what happens? These guys shy away from really giving very tall claims. But I think the market would love to believe that the performances may continue, and for now, therefore, difficult to see sellers come in.
Yeah.
And that is the point for these stocks.
Okay. One last question, we'll close it. For those that have missed the bus, though,
Difficult.
it's difficult, right?
Difficult. Very difficult to buy companies which are at 75, 80 times. We know what's happened to Asian Paints for the last 3 years, right? The bluest of blue chip stocks hasn't given any returns for the last 3 years. So very difficult for people to come in. But that's the point, that very difficult for short sellers to come in as well, just because of the performances that they are giving. And maybe people may not have bought a Siemens ahead of the results, or even after ABB results. And even they are saying that, oh, we missed out because the stock gained. Siemens gained about 12-15% post results. Quite something.
Absolutely.